Oh, we can start. Excellent. Okie dokie. Right. Just having a look at what I wrote in one of my reports. We'll start with the New Zealand dollar, only because I had it up there anyway. I don't actually cover that market for my reports. But I think we talked about it last time. So if any of you watched the video for the last webinar, I don't know if we're recording this one, but hopefully we are, because I think the last one got viewed a lot. I think it was the third most viewed webinar. So yeah, we looked at the New Zealand dollar. It was someone else's suggestion to look at this, and I must admit it's quite interesting. It's been quite a good little market. Let me see, it was 2 weeks ago that we were doing this, so I guess we were either testing or approaching that sort of 68.50, 68.60 resistance level, and you can see that perfectly. Got some overlapping confluence there on the old fibs, so it did pretty much what it should have done, come to a halt there, and it's come back down. You can see really that 66.25 level is then also acting as support. This is weekly chart, so these are the two big levels to watch in that sort of 68.5 down to 66.25 area, bouncing around between there, and we'll have to see which way it breaks. Daily chart. Well, yeah, that not only is that 66.24 area a fib support on the weekly chart, but we've got 66.14, which is a fib support on the daily chart, and also this blue 100-day moving average is backing up that. So that whole sort of 66.25, 66.15 area looks pretty strong as support as well. So just worth looking at those two levels there, and obviously break lower well would be not so positive for this pair. So worth pointing out. I don't know if you want me to look into that into a bit more depth, I can, but it's worth pointing out because the levels are just working quite well in that. There's a short-term chart there not telling us an awful lot more. Okay, I'll start off with the favourites. Actually, I'm going to have a look at pound euro, only because I haven't looked at it for a while, and someone asked me to look at that last time. So let me just try and see if there's anything going on in it. Yeah, I haven't had a look at this one for a while. You can tell from the trend lines. Okay, we've had a good old run up. Oh, look, 61.8% fib. So we've retraced up to the 61.8. That's retraced that from the move down at the peak of July down to the trough in October. So we've had a good bounce back, but obviously that's going to be resistance, and that's holding perfectly at the moment, isn't it? 139.92 is the high. So we got to within 13 pips of that resistance level, and we seem to be coming back down again. So now it's going to be quite crucial what happens around the 113.80, 113.70 area. 138.80, 138.70 area. That's going to be the important support level. If we can't hold on to there, then that'll be a bit more negative, and we'll probably be testing only yesterday's low, actually, 137.88, but that's 200-day moving average support as well. So let's have a look at the weekly chart. That's like a potential head and shoulders pattern going on there, isn't it? I wonder if we're building a right shoulder. It's way too early to anticipate that, of course, and even if we were building a right shoulder, you can't rule out moves higher, but this would be a perfect little neckline there, wouldn't it? If that was to be a head and shoulders pattern. You can see that would be the left shoulder there forming, nice head, a nice symmetrical, well, it would be a nice symmetrical head and shoulders pattern if we sort of topped out. Well, we can top out anywhere up to 142.55 to form a potential right shoulder, but of course it's not until we break the neckline that that's been confirmed. So we'd have to see the market off almost another 10 points before we'd even think about that being confirmation of a head and shoulders pattern. So this is something that we'll have to look at towards the end of the year. Really, it would take probably until the end of the year to form that right shoulder, but worth keeping an eye on it nonetheless. So in the meantime, the big barrier is that 140.00, 140.10 area, and if it gets through there, that would be quite positive. Maybe it needs a little bit of a pullback though. Look how overbought we've got on that daily stochastic there, and it's sort of turning there, looking slightly negative. So yeah, maybe we do need a pullback before we can push higher again. Okay, euro. So euro's taken a bit of a beating, obviously, after the Draghi comments. When was it? Last week now, I think. Almost a week ago, was it? Pushed the currency low, which I think was the object of the game anyway. Hint at some more easing. Yeah, we've broken this trend line down here, which is quite important. And look how it's held this week. The close below last week, the revisit, it was a nice little selling opportunity if you'd missed that move on the downside, and now we're heading lower again. So it was all about the weekly chart at the beginning of the week. There's no sign really of a bottom. I don't think this blue candle is anything to get too excited about, even though we are oversold in the short term. Looks like any rally is going to be a selling opportunity. Actually, you can see that nice selling opportunity yesterday. It got up to that trend line, 110.95. That was almost perfect, wasn't it? 200-day moving average, a couple of intersecting trend lines, a lot going on up there. So not a surprise at all that we topped out there and headed lower again in what is developing into a bear trend. I was actually just looking at what I wrote in my report this morning, trying to remind myself. Yesterday we had strong resistance from 110, 77.81, and then again at 111.10. So we topped out in between there. Actually, topped in the middle, as I've written there, at 110.95. So that was pretty much right in the middle of all that trend line and 200-day moving average resistance. So that did work quite well, actually. I've written today, any recovery is a selling opportunity until we see a buy signal above, where are we now? 109.75, above 109.35.40 allows a recovery to 109.85.95, which should hold a rally. Okay, so that's my sort of upside limit for the day. Worth trying shorts of 109.85.95 with a stop above 110.25. So yeah, at the moment I'm still thinking that this is just any movement to the upside is a recovery in this short-term bear trend, nothing more than that, despite the fact that we're really overbought at the moment. So that would probably be a trade. Well, that's a trade that I've advised my subscribers to look at anyway. We haven't quite got there yet. I hope we do, and then we can get a chance to do that trade. Let's just see where that works with Fibonacci levels. What did I say? 109.85, didn't I? Okay, yeah, that doesn't actually tie in with any particular fib levels anyway, but worth having a look. No, not really. Anyway, we are getting a bounce. The first big short-term fib level is 110.36. So if we were to push up through the level that I gave you there, that would probably be the next target in the short term. Okay. Cable. Let's see what I wrote for cable. No, cable's doing very, very little today. 25 pip range. Yeah, it's hardly surprising that there's not a lot of movement. We didn't get a lot of movement this week before the whole Fed thing. Obviously, we got some pretty sharp moves in a lot of things on the Fed yesterday, which is what everyone's focused on now. In fact, it's incredibly boring waiting for this rate hike because the market can't really focus on anything else. So we do nothing. We're not doing much in between these economic numbers and Fed meetings because all the market really cares about is when's the Fed going to raise rates. So today, very little going on in cable. The weekly chart isn't telling us much, bit of a downtrend over the last few months, so I'm not going to waste too much time on that one. This was quite nice. We were talking. We were getting short up here. I don't know if you're a cable subscriber or I think I talked about this in the last webinar anyway. But that was just nice. That whole trend line and 100-day moving average stuff going on up there. So we were looking to get short. I was surprised at how many days it actually did stay up there. But can you see how we had these long candle wicks up the top there? So every time we pushed up to that 100-day moving average, sellers came in, bashed it. Bulls certainly hung on for a long time. 1, 2, 3, 4, 5, 6 days, and finally, bang, couldn't do it. Every day we closed below that trend line though. So I remained negative on that for obvious reasons, holding below the trend line. And couldn't get through the 100-day moving average. Obviously, some big sellers up there whenever we got to that level. And, of course, eventually we had to break lower, and we have done that. And I can't see any reason now why we shouldn't head lower. So I think I've said today that any rally's a selling opportunity. Yeah, again, we topped in between the resistance levels yesterday of 153.31, 35 and 153.60. We topped at 153.45, so bang in the middle again. What did I say today? I'd said that Fibonacci support at 152.65.60 should hold. Well, we're still hovering around there anyway, so it is holding, but we haven't seen much of a rally off it. If we do, my subscribers should be holding longs at the moment from that level. But I've said look for quick profits on any bounce towards 153. double O 153.10. I don't think this is going to be, that would be enough. If you can nick 30, 40 pips out of that trade, I think that's more than enough for this, considering the downtrend. I've said a good chance this will hold a rally. Stops above 153.30, and then if we do go higher, selling opportunity again at 153.45.50. That should be the high. But it looks like a quiet day, I guess. Heading for the weekend, and then we head into unemployment number next Friday. So I guess that'll be the focus. I wouldn't be at all surprised to see not much happening all week then, because it is this waiting for this blooming rate hike that's just getting delayed month after month. Can I explain why oil went up very high yesterday? No, I cannot. Can anyone else? I have no idea. Short squeeze, probably. We'll have a look at oil then. Yeah, pretty unexpected move. I didn't see any reason why we should turn around and go high yesterday, apart from the fact that we did get very oversold. So I did warn subscribers that we'd got oversold, but there was no indication that, not even on the short-term charts, that we were going to suddenly turn around. And we actually recovered 1, 2, 3, 4 days, 4 or 5 days of losses in one session. Well, the thing about oil is it's not really going anywhere. This is the whole problem. If you look over the last 2 months, we're just stuck in this whole range here. Could put some trend lines on it now. Today's below the September lows, but we certainly didn't close below them on what would that be, Tuesday, and then Wednesday it just decided to go back towards the middle of the recent range. There's no pattern here. There's nothing telling us what's going on. We did break that trend line and head lower, fair enough, but we got oversold and we turned around. There's just no direction really to oil. So I guess, there was some shorts out there after 2-3 weeks of losses. They got squeezed yesterday, but, I'm not surprised that wasn't sustained and we're back down again today. If you asked me where this is going to be in a week, 2 weeks, 3 weeks, I would have absolutely no idea. This looks like a little correction to unwind the oversold situation, but when there's no patterns going on, there's no bottoming pattern here. This is really just, in my eyes, a consolidation of the bear trend. We have been in a bear trend for quite a long time, but I guess oil has got it's got to very low levels, hasn't it? Maybe we just go sideways for an awful lot longer. There doesn't seem to be any reason for this to start taking off and reversing the bear trend. But having said that, as long as we're going sideways, just I guess the big levels to look for, that's all I can really point to now. If we go higher, then you've got this trend line resistance up here around 48.20, and you've also got the 100-day moving average at around 48.40. So I've put 48.20, 48.40 as a good selling opportunity in oil. But where it goes over the next 2 days, I don't know. Yeah, certainly could turn around and retest these lows, but I wouldn't be surprised to see it up there. But I would suggest that's probably the best trade that I can see from there. Obviously, breaking below the September low sold situation just a little bit further before that can happen. There's the short-term chart, and it's not really telling us an awful lot there either, really. I mean, I can't see anything here that's telling me that we were about to explode to the upside. This is a slightly bullish candle, I guess. But again, we've got really, really oversold on the short-term chart. That's it. But buying into a market just because it's got oversold is never the cleverest thing in the world to do. Yeah, okay, this is a fairly positive candle here, yes. Not a pattern, just a candle. This is a fairly here. But I must admit, even with hindsight, I would not have been saying, right, we've got to go long this. Probably would have been saying we should get out of shorts. But purely because of the oversold situation and maybe 1 or 2 positive candles. But I don't think that if you missed the rally, I wouldn't blame you. There's no reason. There's nothing that would have told me that was going to happen. Okay, we're on commodities, so we'll look at gold. Someone's asking gold. Bang on, Q. Nice one. Gold started to get a bit a little early. Now, picture's getting a little bit pushed around by what's going on with the dollar and the whole interest rate thing at the moment. Or if you believe what you read in the news, the financial news, then that's what's pushing gold around. Every time the dollar weakens, gold goes up. Every time the dollar strengthens, gold goes down. Every time they talk about no, Fed rate hike being delayed, gold goes up. When they say, oh no, and it's going to happen next month, then gold goes down. Not the best markets to be trading in at the moment. It's they need well, for day traders at least, they need to get this Fed rate hike out of the way. I imagine even bank traders have pretty much got their hands tied until they know what's going on with this, because markets are just being pushed around by sentiment over the rate move. Give me a sec while gold loads. That's odd. Shouldn't take this long. Let me try and load something else and see if I can get gold to load a bit later on. Okay, dollar yen, another classic pair that's been pushed around by the whole rate hike thing. You can see that this is the weekly chart. 1, 2, 3, 4, 5, 6, 7, 8 weeks of really doing absolutely nothing. It's getting pretty boring. We do need some direction in this, but we are holding above this longer term trend line. So if you want to take away anything that's key from the weekly chart, yeah, we're in a bull trend, and we certainly have held Fibonacci support and trend line support. We're hovering just above this big trend line. So in the longer term, you still have to favor the bulls in this pair as long as we're holding above that trend line. The daily chart really is telling us nothing. We're in one big sideways trend. Okay, that's really not what I wanted to say. I wanted to say something far more exciting, but stick some trend lines on and trade the channel, really. In fact, probably even just put the trend line here is probably the best place to put it. And you can see these are the parameters, really. It's all fairly... A breakout above 121.70 would be good, but we have got Fibonacci resistance at 121.90. There's also the 100-day moving average up there. So this is really the 121.70, 121.90 area is quite a lot of resistance to going. Likely to hold at the... I see a head and shoulders in oil. No, I don't. In oil. You're talking about over September, October, are you? You're talking about this pattern here, I'm guessing. If you are talking about that is not a head and shoulders pattern, I'm afraid. Firstly, you only get a head and shoulders pattern after a sustained period of higher moving prices. So head and shoulders patterns only happen at the end of a bull trend. It can be a short-term bull trend, but this is definitely not a long enough bull trend. 3 days of gains does not a bull trend make, I'm afraid. So no, that's definitely not a head and shoulders pattern. That isn't a pattern at all. In fact, I can see why you would say that. If you've been studying this pattern and you've been reading your textbooks, you might think that that's a shoulder, that's a head, and we might be forming a right shoulder here. But firstly, it's you could argue that was a head and shoulders pattern, or potentially forming a right shoulder. It hasn't formed anywhere close to a right shoulder yet, but that would only be the case if we had been seeing many weeks or many months really of rising prices, and of course we haven't seen that. So no, that's definitely not a head and shoulders pattern. Okay, just so you're aware of that. I don't want you to start trading that. However, the outlook isn't that positive for oil, but that is not your sell signal. Okay, let's see if we can get gold up there now. It's weird. I don't know why that's not loading. Let me try it again. My pleasure. Yeah. Just needed to warn you about that because I don't want you to be trading that when it isn't what you might think it is. Uh, look for potential inverse head and shoulders patterns. So that's a head and shoulders pattern, a mirror image of it after sustained moves to the downside. So that's something you should be keeping your eye out potentially in oil at the moment. Obviously, we have had moves to the downside. That what we were looking at there is not an inverse head and shoulders pattern. And when you see, let me try and get gold up. When you see a sustained move higher, that's when you want to have your eyes peeled for a potential head and shoulders pattern. Oh, sorry, hang on. Ugh. Not having any luck with gold at all. Sorry about this. That's gold versus the dollar. We don't want it that way around. No, gold just doesn't want to load. Okay, I'll just try it later. Sorry about that. Sometimes that happens with this system. It's annoying actually because gold's quite interesting. But if I reboot and start the whole thing again just to get gold up, that's not going to work too well. Just give it one more go. This might work. Here we go. Okay, this isn't actually the one that I usually look at, but I've just found another contract which looks like it's pretty much matched the gold spot chart that I do look at. Okay, so I don't have any of my trend lines and everything on here because this isn't the one I usually look at. But anyway, okay, gold's had a good run, good recovery. We've hit the 55-week moving average here, as you can see. That's been a problem. Oh, God, I have to break this down now for you. Hang on. I will break this down for you, actually. Let's just look at this daily chart to start with before I start breaking down longer term charts. I can do that for you if you want me to. Actually, this is slightly different to the correct gold spot price. So I'm going to have to get the other gold chart up. Sorry. Unfortunately, it's not working. Yeah, I can close the program, but it takes so long to reload. We'll finish the webinar by the time I do it. Okay, it's not going to happen. All right, never mind. There's plenty of other markets to look at. Yes, let me know if there's anything you want me to look at. Otherwise, well, Aussie dollar is a currency pair that I keep an eye on, so we might as well have a look at it. We'll go on the stock market side of that. Okay, so Aussie dollar, you can see I've littered my page with Fibonacci levels. So we had a good bounce off in this. I didn't think that was really a double bottom, but nevertheless, we did still manage a good recovery. So who knows? Maybe it was, maybe it wasn't. But it wasn't really, because we didn't get a good enough recovery. So it just didn't seem enough of a convincing double bottom. We were oversold, however. There was a bit of divergence there. So we did recover. 100-day moving average really did its job. It's a good little resistance line, the 100-day moving average. It's always worth paying attention to it. We also had trend line resistance there as well, so that was an obvious sell. We had all sorts of Fibonacci resistance going on there, so yeah, no big surprise that held. It was an obvious short. Yeah, you just had to get short that. We even got a second bite, a dip down to this support, a rally off it, and another bite at a short. I did think that we could potentially hold around the 71.90, 71.80 area, I must admit, but that wasn't to be the case, and we burst through, broke this slightly longer term trend line going back to August, so it's all looking pretty negative now. We're holding below that trend line. Doesn't look good for the Aussie dollar. Yes, we are getting oversold. Well, we are already very oversold, but you know what I'm going to say, it's never enough of a reason to go long. I think as long as we hold below this trend line as we're doing now, 71.10, 71.20, then that certainly will keep pressure to the downside. And even if we do get a bounce on an oversold situation, I don't think this is going to go too far. At best, we're heading sideways, aren't we? So I could probably stick even more trend lines on this, in fact, just looking for support as and when it comes. Yeah. Don't think I need this one, actually. Let's take that one off, just to try and clean the picture up a little bit. I think that's what's key now. So we're stuck in this channel. We'll have to see what happens if we get down around the 70.35, 70.30 area. Break below there, of course, well, we'd be risking looking at the late September lows and the actual September lows down at 68.93. Not a particularly positive picture. I think the best the bulls can hope for is some sideways trading in this channel. Okay, we'll look at some stock markets. It's worth having a look at the E-mini NASDAQ. I should show you what I wrote for that, actually. What did I write? I'll tell you what, I can't get the gold chart up, but I'll show you what I wrote for today. Hopefully this will help. I'll try and get the gold chart up before we finish. But okay, so gold had the most volatile day since the 37-point day range on 2nd of October yesterday. You know what happened yesterday, so I don't need to repeat what happened. Okay, gold's been driven by the Fed and the dollar, holding above 11.58. Well, we're around trading around there now. It allows a recovery to first resistance at 11.63, 11.64. It looks like the high today is 11.62.36. So we've got to within less than a point of that first resistance and topped out. I'd said that if we can continue high, look for a selling opportunity, 11.69.70. Well, of course, that's not relevant because we haven't got there. Stop above 11.73 to a target 11.80, 11.81. So now it's all a question of whether we can hold above 11.57, having already topped to that first resistance at 11.63. Failure to hold above there, and I fear that we will not be able to hold above there. Retest yesterday's low at 11.52, 11.53, then support at 11.49, 11.48. So I think that really is the key support right now, that 11.48, 11.49. And I've suggested profit taking on all remaining shorts. But I've also said this is an excellent buying opportunity this week. But it's probably worth stopping out at 11.45. We do have more further very strong support at 11.41, 11.40. So if you want to try and be nimble and you get a chance to buy it down at 11.49, 11.48, you may not want to run it as far as, a stop below 11.35. If you do, that's fine, because you could try buying it up in the high 11.40 area. You could try and then buy it in the low 11.40 area just to double up on your position, but you need to stop out sort of below 11.35 really, because below there, and I wish I could show you on the chart, it would be much more negative. So I'm not sure about gold. I think it's just being pushed around, as I said, by the whole Fed situation. But those are the levels that I think you want to pay attention to. Okay, so you can read that for yourself. Let's hide that and go back to the NASDAQ. So the NASDAQ, actually, it's worth looking on the weekly chart. You get a better perspective of it. So technically, NASDAQ's been quite good, and it is a good technical market, actually. Okay, we actually only need to go back to end of 2014. There's this trend line, 2014 trend line, and that, as you probably know, has held really nicely. We've talked about this in previous webinars. Held nicely on both occasions at the end of August and also at the end of September, beginning of October. Nice two big long candle wicks there, showing that bulls are piling in to long positions down here, squeezing out the shorts. I don't know if anyone would have predicted the strength of this recovery. I didn't think we'd get that far. I thought we'd at least halt around the 43.80 area, but we certainly didn't do that. Shot straight through it. 1, 2, 3, 4, 5 weeks of very, very strong recovery. We've gone up almost as quickly as we went down. 1, 2, 3, 4, 5. Actually, it took 6 weeks to go down. 2, 4, 6. 1, 2, 3, 4, 5. Yeah, 6 weeks to go back up again. So not quite a V shape, but certainly a big old recovery. Yeah, a nice W-shaped recovery there. Look at that. Perfect. Right, so the big question now is we're retesting the year's high at 46.86. We got close to that yesterday. I think we got to 78, was it? 46.78, yeah, that was the high. It's not the all-time high, by the way. Okay. See, this gives you a look at this W-shaped recovery, and now the big question is, we're overbought, obviously, after such a massive move to the upside so quickly in less than a month. Is this a huge double top pattern, which would be very negative going forward, or do we, for example, Friday night is going to be very important. Tomorrow night is going to be an important close for all the markets because it's the end of the week and it's the end of the month. So it's a weekly close and a monthly close. We're going to have to close above 46.83 for any chance of this not being a big double top pattern. And of course, if we reject that and close significantly lower tomorrow night, then you might have to say that there's an indication there that this is a big negative double top pattern. I've no idea what will happen. We've got to wait. Yes, it probably is worth selling into shorts up here in the hope that we do get this big double top pattern, and because the profit potential is huge if we see the market collapse again, and the risk reward is relatively small because if you stop out above 4,700, well, you know, you're looking at maybe a 20 tick stop, but hundreds of points are potentially on the downside if that double top works. I mean, you'd easily be looking at the 4450 area, 4400 area as the first target, really. So yeah, as I say, risk reward could work on a short there. I'm not saying it will definitely work, but we're in the risk reward game, aren't we? We're looking for potential low risk, high reward opportunities, and that I would imagine is one. Let's just have a look. I don't think there's anything on the short-term charts that indicate we've seen a top yet. No. No candles or patterns yet telling us we've topped out. So we're going to have to keep a close eye on those short-term charts. But I certainly got overbought in the short term as well. So just watch that, see what develops, see where we close tomorrow night. The other markets aren't necessarily pointing to anything negative, though. That's why I can't get overly excited about this. I need to see confirmation in a couple of other stock markets as well that they're topping out, and I'm not seeing that anywhere else. So if I had high conviction that this is a double top, I would be screaming it and I'd be telling everyone to get short in my reports. But the thing is, the Dow Jones actually doesn't look too bad at all. We've pushed up above 200-day moving average. You can see we pushed up above this trend line. We've pushed up above this longer-term trend line going back to the peak in May. So really, we're holding above here. There's, I can't say that you should be getting short the Dow Jones right now, even though we are ridiculously overbought. And I know that there's a lot of shorts out there that are hurting, but there's no reason to be short. Really, well, if you follow me, you'll know that once we broke above this 17,200 level, this was the key one. The 100-day moving average, you've got the trend line. And I did get excited on this candle because it looked like we'd rejected it completely. 1723, I was telling everyone to get short up there. Look for a top. This red candle with the what is it called, shooting star, whatever it's called, was telling me that's it. We're going to go lower, and then of course, what was it? Draghi, I think. Draghi talking about easing, and then the China rate cut. Well, that ended my excitement for a move to the downside, and we just rocketed higher. You can see how this trend line held initially, and once we got through there, that acted as really good support, as did the 200-day moving average, and we're just pushing up again. So at the moment, any move to the downside really looks like a buying opportunity in the Dow, which is why, I can't get too negative about stock markets. Yeah, we're even holding above the 55-week moving average and these two peaks here. So yeah, I can't say anything negative really about the Dow Jones, that's for sure. We'll look at the S&P. Again, on the weekly chart, hasn't managed the recovery that the Nasdaq has up to the previous highs, but it's a good recovery. And yeah, we're beating chart levels. You can see that we're holding above them. So once again, in this market, if I can just get the daily chart up, which I will do in a minute. There you go. So yeah, this was the big level again for me. Well, we had a big level down here, similar to the Dow Jones on this chart, the 100-day moving average. This neckline too. If you want to talk about head and shoulders, we did see potential head and shoulders patterns on the Dow Jones and the E-mini S&P. I think that this, I wasn't sure at the time whether this was one, but look, left shoulder head, right shoulder, and that is at the top, obviously, of a very, very sustained bull run. We've been in a bull run, and that was quite a big head and shoulders pattern built up over, well, many months. 1, 2, 3, 4, 5, 6, 7 months or so, 8 months. So yeah, that was a very significant head and shoulders pattern. And once the neckline broke, well, actually, once the actual right shoulder formed, we collapsed. So we certainly achieved the head and shoulder target and overran it. Okay, anyway, enough of the history. I did think this neckline and the 100-day moving average and everything else, just like the Dow Jones, that we were going to top out and turn around. And this candle told me that is exactly what was going to happen. So I did get very excited, and I did pat myself on the back thinking I'd pick the top for the recovery, but of course proved wrong the next day when the whole Draghi China rate cut thing happened, and we just pushed up. Again, some good resistance up here at the trend line and 200-day moving average, but that didn't hold it. We pushed up above there this week, and that's acted as good support, as you can see, and we've just pushed off there again. The 200-day moving average has acted as a nice little springboard. So nothing's telling me to sell the S&P, even though we're very overbought, and a lot of people want me to tell them that it's going down, but I can't. There's no sell signal. It all looks positive, and once we've broken through these two levels, you have to be long it. So there you go. DAX on the subject of stock markets. Sorry, right, DAX. Here we go. Yeah, well, we're hovering below some Fibonacci resistance and trendline resistance and everything else. The European stock markets don't look as good as the US stock markets. They haven't done for an awfully long time because, of course, we peaked in April, had this huge drop off. So yeah, there's the European stock markets have all lagged behind. I'll show you the FTSE in a minute. Lagged well behind the US. Don't need that trend line. Oops. See if I can get that back. Ugh, these charts are not doing what they're supposed to today. Very frustrating. Okay, don't know why that's happened. Oh, there we go. Okay, cool. Yeah, this is a bit of a confusing picture, really, but you can see there's a big Fibonacci stuff going on around the 10,850, 10,870 area. This trend line as well, and we're really having a problem pushing through there, aren't we, at the moment? And we've come off there today, so don't know. This is less positive, as I've said. I guess if there was any market that I would be forced to sell, it would be the DAX, purely because we haven't managed to get through important resistance levels. We haven't closed above that 10,868.70 area. So who knows? We could at least dip back to the 100-day moving average. But again, I'm not seeing anything particularly negative here. So maybe we'll just consolidate before we push higher. But I'm guessing we're not going to do an awful lot before the unemployment number now, because the whole market will be waiting for some direction and clues on whether the Fed will raise in December. All dull, fed up waiting for this stuff. It's most irritating when these situations arise. Yeah, I did say, I mentioned the FTSE, so I'll have a look at it. We've got only a few minutes left, so if there's a market you want me to look at, scream it out now, and I'll find the time to do that before we have to stop. Yeah, FTSE, again, lagging behind the other markets. In fact, we didn't even get the big push up in the FTSE last week on the whole Draghi easing thing that we got in the DAX and Euro Stoxx. So, this is not that positive, and we can't even get through the 100-day moving average at the moment. We haven't managed to close it. Well, we won't manage to close it yesterday, but we've given that all back today. So, a bit of a confusing picture, really. But yeah, as I said, certainly not as positive as the US stock markets look. I could put a little short-term trend line on there just to see when that breaks. I'm finding the US, all the stock markets difficult to read at the moment. To be fair, there's no patterns, and it's quite tricky. Quite difficult to make sense of them, and I'm not trading them for that reason. What else do I need to show you? I think that's it. Oh yeah, let's try and get this gold market up again. Come on. Yen. Dollar yen? Or anything else against the yen? I've done the dollar yen already, but I'll look at it again for you if you missed it. Pound versus the yen. I like that. Let's give that a go. Seeing as gold is not playing. Okay. There you go. There's a potential head and shoulders pattern. These trend lines are old. I've not looked at this one for a long time. Okay, let me see how I can break this down. We'll start with some fibs. That always gives me a nice perspective. I'm going to start there. Okay, I like that one. And I also like that one. Well, okay, it's quite interesting. Okay, so you can see how we are in an upward rising channel still, maintaining that. What are we looking at? 1, 2, 3, 3-year bull trend. Nice. Okay, looks good. This trend line's done a perfect job, hasn't it, over the last 2 months? So buying into that trend line has worked lovely. We're now pushing up above the 55-week moving average, so it's a little bit more positive, bit of a pullback this week. But all in all, looks good. No point in betting against the trend, no point in betting against this trend line. So we'd have to at least see a break below this trend line around the low 182.00 area before I would even start to think about getting negative. But then even down here, where the 100-week moving average is around the 178.60, 178.60, yeah, okay, that's good support. You've also got a point lower. You've got good support around the 177.60. So that whole 100 pip area is good support if we were to break that trend line around the low 182 area. But right now, all looks good. Buying into dips, according to weekly chart, would be the preferred strategy. Daily chart. Less clear, but let's just put that trend line on here as well. Yeah. Working nice line, isn't it? Where did I have my fibs on here? Daily chart is less clear, certainly. If you're looking for a potential head and shoulders pattern, this could be a big left shoulder, this could be a head, and this could be a right shoulder. It doesn't matter that the neckline's wonky, but we wouldn't know that until probably the end of the year to see if this develops into a more negative. Sorry, if this does develop into a right shoulder, and for it to be a right shoulder, you really need it to be holding below the 100-day moving average. So stick that on your chart and see if it does hold below it, and then you want to be looking for a break below the trend line to confirm it. But there you go, just because we've been on the subject of head and shoulders patterns. Right now, I wouldn't even bother to think about that, though. We haven't even formed a right shoulder, so jumping the gun there wouldn't be good. But having said that, if we did break the trend line, yeah, that would be a little bit more negative at the moment. And you can see how we've peaked here. Doesn't look too good in the short term, does it? We hit the trend line, but we have not been able to get back above the 200-day moving average. Let me see if there are any fib levels on here. Yeah, look at that. So that whole area up here with the 200-day moving average, the red line, and the 38.2% fib, always a nice fib to pay attention to, 186.16. Well, it looks like we peaked exactly out there, 186.18. So that's really done its job of holding there. Not looking too good in the very, very short term. Let's see what happens around the 184.00 area. If that holds and we can push up through 186, that would be positive, of course. If we can't hold above 184.00, maybe we're going to see another test of this trend line at 182.50, 182.40. I'd be buying in there. We'll probably be oversold on the daily chart by the time we get there. And you've got to buy into a trend line that is working. That's what you're in the trading business for. It's held one. Well, it's touched it. Obviously, this is where the trend line started, and then it held again 1, 2, 3 times. So it's a well-established trend line. It is worth buying into a strong trend line support in a bull market, and then maybe on this bounce, if we were to, maybe then we'll have the momentum to push up through that low 186, high 185 area, and then finally start making some gains up to the 187, 90, 188 area, by which time that will also be the 100-day moving average resistance. So that will be the key level if we get up through there. Obviously, as say, break below the trend line, that ain't going to be too good. Let's see if the short-term charts are telling us anything else. Not really. Not really. Bit of a double bottom there, yeah, sure. We did manage to take off, but I'd watch that trend line, yeah. What have we got here? There you go. We've got a bit of a triangle pattern going on, I guess, in the very, very short term. So we're getting narrower. That triangle pattern is narrowing. So eventually we'll have to break out of that, and that'll give us a clue to the direction. If I had to bet on it, I'd say we'd break above this 186 area, and then we'd push higher. So actually, that trend line around the 185.82, 185.80 area ties in quite nicely with that fib resistance around the 186.16. So as I said on the daily chart, the high 185 area, low 186 area, that's going to be the key resistance. And if we can push up through there, that would certainly look a bit more positive. Let me remind myself, yeah, maybe we can do that now that we've unwound that overbought situation. So let's see if we stabilize and push up through there. Yeah, just stick, if you've got that on your chart, stick that triangle pattern in on the short term at least, and watch what happens. That's your short term breakout clue. What have we got here on these very short term trend lines? Yeah, that's relevant, I guess. Not quite so important. I wouldn't pay too much attention to that one, in fact. Yeah, that's worth having on there. Look, we've got a nice. We have got still an uptrend channel. It's not very steep, but it's still an uptrend channel. So I think this is the kind of picture you need to be looking at for this pair. Yeah, break below 184 certainly wouldn't be very good. We need a break above 180. 186 obviously to be more positive. Then we're going to test this little short-term trend line, but this is nowhere near as important. This is more of a target 186.80. Yes, we'll probably pause when we get there, but that's nowhere near as important as what we're seeing on the daily chart. Yeah, that would just be a little. I can stick that on here. There you go. That would just be a little target. Okay. Can't really say an awful lot more about that, but buying into dips that still looks pretty safe, rather than trying to pick a top in it. 11:52, which means I think we've overrun already, and I'll probably get told to stop any minute now. But if you've got anything else you'd like me to look at, I'll try and squeeze it in. You know my website, daytradeideas.co.uk. Happy to say we won best Forex for FX Street best buy side analysis, which we've plastered all over the top of the website because we're very proud of that. Okay, so yeah, this is the website. You've probably seen it. Yeah, we have to wrap up. Okay, yeah, we have to wrap up. Anyway, please have a look at the website. I'm sure you're following me on Twitter already, but if you're not, you can follow me there on the homepage. So thanks very much. Hope you enjoyed it. Hope it was a help. Please do feel free to contact me on Twitter or my website if there's anything else I can do for you.